What up guys, welcome back to our channel What Up Canada. This is Sid and today we're going to talk about a really interesting topic. I received so many queries with regards to what is like the salary structure here in Canada, what is the pay structure, what are sort of deductions that happen from your gross salary, what is like the take home salary for probably a $60,000 gross income or about $100,000 gross income, what is CPP, EI, income tax. So we're going to talk about everything in detail in this video. I'm also going to show you what are the tax structure or the tax brackets for 2021, and we will also be looking at a working example as to how to derive to a net income. So let's start with the video. But before that, if you haven't really subscribed to our channel, please do so. We make 2 to 3 videos every week about how life is here in Canada, covering really important things. So please subscribe to our channel. So let's first talk about what is gross income. So the gross income is your total income that you are getting from your employer, including all the bonuses, the benefits, etc. Arriving to the net income involves deducting the various components from your gross income, which is your income tax, both federal and provincial. So the federal tax remains the same, but the provincial tax would vary depending on which province you are a part of. Then there is a component of CPP, which is the Canadian Pension Plan, which gets deducted from your salary as well. And also you have another component which is called the EI or the employment insurance. So we will cover them in detail, and I'm going to now focus on the screen and I'm going to talk about the tax rates which are there as a part of 2021 Canadian tax. So let's focus our attention to the screen. We have this screen which showcases Canadian income tax rates for individuals. So I'm gonna show you the tax rates for 2021. So it is 15% on the first $49,020. Then it is basically a progressive type of income tax calculation here in Canada. So for the first $49,020, you'll be taxed at 15%. Thereafter, from $49,020 to $98,040 would be taxed at 20.5%, and then it keeps on going and increasing thereafter. So the next tax bracket would be 26%, which is on the next 53,939 of your taxable income, which involves 98,000, any income between 98,040 to $151,978. So as I talked about earlier, it is on a progressive basis rather than a flat tax rate. Similarly, it is there for your provincial tax. So if I scroll down and if you see the provincial and territorial tax rates for 2021, herein, if you are in Ontario, it is 5.05% on the first $45,142 of your taxable income. Then it is 9.15% on the next $45,145. So again, if you are in the 0 to 45,000 taxable income bracket, then you'd be charged at 5.05%, and if you are above the $45,142, then it would be progressive. Any amount above the $45,000 mark would be taxed at 9.15%. So your income tax was your first and most important component of your calculation for your net income. Next, let's focus our attention to the CPP, which is the Canadian Pension Plan. So now again, let's get back to the screen and I'll show you how it's calculated. So the CPP contribution rates, maximums and exemptions. So this table basically shows about how CPP is being calculated. So for 2021, the maximum annual pensionable earnings is $61,600 and the basic exemption amount is $33,500. So basically your $61,600 is the maximum pensionable earnings, and an exemption of $3,500 is there to this income. So if you reduce this amount from $61,600, it amounts to $58,100, and the rate at which this CPP is calculated is 5.45 for 2021, which amounts to $3,166.45. So I'm going to actually show you while calculating this, but meanwhile we can just understand that 5.45% is the CPP rate for 2021. So your third basic component of deduction in your payslip would be your EI, which is your employment insurance. So if we focus our attention to the screen, the EI premium rates and maximum have been listed. So for 2021, the rate is 1.58%. So we'll keep this in mind, and once we are doing the calculation, I'll showcase this again. these are the basic three components of your pay stub, and these are the deductions that happen from your gross salary. So let's start doing a working example so that it becomes much clearer to you guys. So let's take a hypothetical example of someone who is earning $60,000 annually. So gross income is $60,000, and as per the federal income tax rates, so it was 15% for up to $49,020, then for 20.5% for 49 to $98,040. So since it's $60,000, we would be basically catering to these two slab categories. And as I told you that the federal tax rate is calculated in a progressive way. So for the initial 0 to $49,020, it would be taxed at 0.5, and for the remaining $60,000 minus $49,020, the balance that remains would be taxed at 20.5%. In the tax calculation now, so tax equals to, so it will be 0.15 into 49,020, which amounts to 7353, and then we have to also calculate 20.5% of the remaining 60,000 minus 49,020, which amounts to $2250.9. So the total tax will be 9603.9. So this will be the total federal tax which this person has to pay for his salary, and the net income we'll be calculating after we calculate both the CPP and the EI deductions as well. So now let's calculate the CPP and the EI for $60,000. So for CPP for 2021, the rate is 5.45%, and maximum pensionable earnings is $61,600, and we are exempted for $3,500. Since the person earns $60,000 and the exempt amount is $3,500, so to calculate CPP, what we're gonna do is we're gonna subtract the 3,500 from 60,000 and then multiply this with the CPP rate, which turns out to be $3079.25. So this is the total CPP that this person would be contributing. And next we'll calculate the employment insurance. EI for 2021 is 1.58%, and the maximum insurable earnings is $56,300, and the maximum employee premium for the year is $889.54. So what this basically denotes is that the maximum insurable earnings is this much. So even if you are earning $60,000, $80,000, $100,000, you cannot contribute more than this amount to your insurable earnings. Okay. And we would be calculating 1.58% of not 60,000 but 56,300, as this is the maximum insurable earning. So if we calculate 1.58% of 56,300, it comes down to $889.54. And that's the maximum employee premium which the employee can contribute to his EI for the entire year. So for our calculation's sake, we just considered three basic elements of our deduction, which was the income tax, the federal tax. We didn't take into consideration the provincial tax. We also took into consideration the CPP and the EI. So these were the three basic deductions that we have considered. There might be other elements like your life insurance, your accidental death, your short-term disability, long-term disability, dental and medical plans. So those might be some other deductions that might be a part of your paycheck. So it varies from person to person and any plans that the person might have enrolled in. Now let's focus here and calculate the net income. So the net income would be your gross income minus your income tax, which is your federal, provincial, minus your CPP, minus your EI. So $60,000 minus income tax was 9603 minus CPP was 3079.25 minus your EI was 889.54. So you are left with $46,428.21. So this is the amount that you'll be left with at the end of the year, deducting the income tax, the CPP and the EI. So now let's show you a sample pay stub and what all components are there as a part of the deductions. So herein you'll see the salary, means the quantity would be the basically the number of hours, the rate would be the hourly rate if you're an hourly employee, and then there would be a component of your current amount and the YTD amount. So YTD is basically year to date amount. Then the withholdings, as I talked about, would be your CPP, your EI and federal income tax. And depending upon what you have opted for, then there would be deductions like your short-term disability, your long-term disability, your RRSP contributions, then your life insurance, your AD&D, your dependent life insurance. So it totally depends on what plans you have opted for. So hope things would be much clearer now and you can better now understand how things work here in Canada. If you have any questions, please drop them in the comment box below. And if you like the video, make sure you subscribe to our channel as well. So until next time, take care of yourself, your family, and stay connected. Bye.